Looking for a breakout in key indices. Naresh, what's the view on energy and metals? BPCL, HPCL, Hindalco, all of these stocks are in focus.
So continue to have a very bullish view on energy as well as on aluminium side of metals. So if you look at the way crude has broken below that 70-75 mark and stays there is a big positive for OMCs. And then when we look at the longer term charts for BPCL, HPCL, IOC, they've gone through a long consolidation. The last 10-year returns are not great. They've given a breakout and have been consistently trending higher. So that looks very promising. Still a buy on dips from here on as well. Have a positive bias given the exposure. Second, looking at Hindalco, the stock made a new all-time high. You have aluminium prices which have gone up. So from a low of 2,300 to 2,250, they're back to 2,600 plus. The last 1 year high is closer to 2,700 odd. So it's been a good recovery in aluminium prices as well as alumina has done well. So on dips, Nalco and Hindalco still remain a buy.
Sunil, hi afternoon. What is it that you're making of the market construct? A strong global rally. We're very much part of that. Do you think it'll continue unabated in the backdrop of all the stimulus measures from the Chinese central bank and of course the US interest rate curve turn as well?
Yes, I think at least for the next week, 10 days. So why do I put a break at 10 days? Because our earnings season will start. And as you know, many of the segments have factored in future earnings growth at very rich levels, like mid caps and small caps for starters, but within that, defense, infra. So I would say that the earnings season could be the next trigger for the market from a domestic perspective. International, the news looks good because crude easing. I think the forward crude prices are trending below 70 now. So that's very good news for India. The US presidential election, while it's an overall uncertainty issue, I think India specific may not be, but if a Trump is coming to power, then that again is negative China, positive India. So I think a lot of triggers there. The monsoon, for example, normal distribution, the spatial distribution you need to study a bit, but Kharif sowing has been ahead of target. So that augurs well for inflation. So if food and fuel, both the inflation are trending down, that maybe RBI triggers RBI into a more accommodative stance. Whether a rate cut happens in October first week or not, I don't think it's early days for that. But at least the outlook of a trending accommodative stance augurs well for the equity markets. So overall, I see lots of positives, but sector specific, stock specific, the earnings season will give us more clarity and guidance.
Waiting by for that earnings season, but talking about earnings, at least the cues coming in from Accenture weren't as bad. I mean, there were positives in terms of the consulting revenue bouncing back, headcount addition being at a 10-quarter high, the fact that the bookings have been strong, book to bill was around 1.2x. That definitely augurs well for the Indian markets as well. Sunil, what's your view on IT? Should one buy ahead of the earnings season or just wait by, let the commentary come in and only take fresh positions there?
No, I would be a buyer in the IT because to me, it's not just about this. It's the fact that the rate cut cycle is positive for the BFSI space in the US. And when the BFSI space does well, that they are the biggest buyers of Indian IT products. So that's one. The second is the situation around the fact that when foreign flows come in, passive flows tend to dominate. And IT is a significant part of the index. So they would automatically get that buying support from FII buying. So I would say that the domestic earnings season outlook is not so critical for IT because it's a stable single-digit earnings growth which has been there for years. That's going to continue. I don't think any big negative surprises should come through. So I would remain a buyer in IT, buying on dips.
Interesting. That's the take coming in IT. Kunal, what's your reading? Because, IT has nicely now moved. It's no more a selective one or two odd stock story. The index at an all-time high. What lies ahead now?
So I think the path should be on the upside again for the IT index. Last 1 week or so, we've seen the sector churn playing out for the IT index, where the money seems to be moving out from the IT index in terms of profit booking and moving back towards the financials. But I believe largely when we look at this kind of a 3-month, 4-month rally from 32, 33,000 for the Nifty IT index towards, I think 42,500 or 43,000 was the high the IT index has made in the last 1 or 2 weeks. I think it's been a fantastic run for the IT stocks. And this generally indicates a new trend in the making. Now, there could be a pause in between. There could be sideways consolidations for stocks, maybe price corrections for stocks which get back into overbought territory. But that should be taken as a buying opportunity. We looked at TCS just about a couple of days back when the stock was an underperformer of sorts. I think it had fallen down by 9% as compared to Wipro, Infosys, HCLTech as well as Tech Mahindra, where these stocks had corrected by 4 to 5%. And that stock has played a catch-up. TCS has played a catch-up and it's covered up the underperformance today after that move. So, which means that what we are looking out for is just a normalized correction into these stocks. And I think at dips, one should be looking at buying.
At dips, one should be looking at buying. Naresh, what's the preference between Exide versus Amara? Both are up 4 to 5%. And the other one I wanted to discuss with you is Westlife Development. That stock is up 7%. And some of those graphics will come up for you on the screen, wherein Goldman Sachs has upgraded the stock and the target price is 1,075. What's the view on these two pockets?
So both these names now trend together. So either of them is fine depending on one's preference. But the trend has been a little lower over the last few months. Today is a one-off day, so I would still wait out and not really get into the stock right away. I would wait for a follow-up action tomorrow and then maybe take a call.
A very quick break, quite a few buzzers there. We'll address them on the other side. Little somber, although flat. 26,197 is where we're currently at. Sugar, of course, is a sweet pocket. We just flagged off that. And the fact that reports are suggesting that the MSP of sugar might actually be up. So that's definitely one entire sector which is looking quite smart. Also, UBS has come out with a very detailed note on the entire pharma sector. For Sun Pharma, they've initiated a buy with a target price of 24.50. Cipla target price at 2060 as well. Although on a Zydus Live, they've initiated a sell, as is the case with the Dr. Reddy's as well as Oro Pharma and Lupin as well. They're saying that the trends are now weakening in India and US, and the street is underappreciating the growth slowdown in both India as well as the US. So Neil, wanted to get your thoughts in on pharma because, you've definitely seen the tide turn for the pharma sector, but not long lasting, says UBS at least.
I tend to agree with the UBS report because I think that the US is in a very fine balance. With the rate cut scenario, the Fed delaying the rate cut and then launching it in the hopes of delaying or avoiding a recession. But we still don't know whether they will succeed in that, right? So while the rate cuts are good news for equity markets overall, for interest rates, for BFSI and all of that, the final results on the US economy, I think, are yet to be stated. And I think that there are multiple reports there with conflicting views saying that some indicators are indicating that there could be a recession a few quarters away. So I think from that perspective, if there is a recession, mild or even full-blown, that's not good news for the pharma sector. So it makes sense to stay at the sidelines, wait, maybe very stock specific in that. And within pharma, I would still say domestic pharma, to me, hospitals, diagnostics, they represent a much better bet rather than an export-oriented international sector because I think over the next few months, we'll get more clarity as the data comes out and then we can take fresh positions. So by and large, I'm in agreement with what the UBS report has been suggesting.
Point taken. So that's the latest take on pharma. But what's your take, Sunil, when it comes to the agri side of things? And I'm talking about, of course, sugar as a pack, which is in a sweet spot at least today. Chemical companies back home are also showing signs of pickup, especially the specialty chemicals ones. Are you looking at these 2-3 pockets incrementally?
I think sugar, is very, very, event specific to the government announcing. I think it's not a sustainable thing to do. And tomorrow, if some other minister comes and says something contra, it could reverse back. So sugar is a very highly commodity specific. Government puts in controls on a lot of things. So I would say that it's a very tactical play. But overall, on the agri part, I would say that the good monsoon augurs well for rural related stuff rather than pure agri. So what do I mean by that? I think tractors is a good play because with a good monsoon, good harvest, people will then step up the buying of tractors. It's good for rural demand. With more money in the hands, people will go, the other housing and all coming in and helping. So I think that the rural story is a good play at this point of time, given the overall situation, but not necessarily a pure agri. In agri, I would say that, the sugar is also related to ethanol and related to the fact that crude prices are dropping. So how far the government is going forward on ethanol blended petrol. So a lot of uncertainties around that space. So pure agri-related chemicals, for example, fertilizers and pesticides, you will be bullish on because good sowing, good harvesting. Next, it augurs well for the next Rabi crop also coming up. So very sector specific in the related spaces to agri rather than pure agri play as such. So overall, broader rural play is what I would be focused on.
Ethanol price and MSP hikes come into effect. What are the stocks that are going to benefit? And of course, what's the word coming in from the industry body ISMA? Let's listen in.
The manufacturers who are manufacturing ethanol, especially the ones who have come up with a capacity recently for juice ethanol, I think would be would be benefiting the most. I think Balrampur would be a beneficiary of it because they have come up with a facility in Mazapur, which is a dual feed facility running on juice as well as grains. I think for that asset, it has been, they have not yet got a chance to sweat that asset fully. So I think they would be among the beneficiaries in the listed space and within our coverage universe.
The government decision, because that is something which we will know only when they publish it. But what ISMA has proposed based on the formula, and that is coming to around 73 for the cane juice and around 67 for the B heavy, and C to around 59-60 rupees. Cane farmer perhaps is the best suited, and they have the highest income compared to all other stable crops. So I believe the government will decide whatever is the best, and keeping into mind the cost of production, they will also have to keep in mind the ultimate consumer prices. So I think this is about creating a balance, and ultimately to make sure we are also always favoring that the farmer income should be ensured, that cane payment has to be made timely. So I believe this will consider everything. And for next year FRP, I think this is good enough. And in future, we will see how it turns out to be.
Right, that's the take coming in on sugar. Sugar stocks definitely holding out very smartly. Let's see what Pratap Snacks as well is up to. It was a big newsmaker this morning. And Autumn Investment and Mahi Madhusudan Kela are looking to buy about 1.1 crore shares, and that equates to a solid almost 47% stake from Peak Partners as well as Secure Capital for a consideration of about 846 odd crore rupees. That's Pratap Snacks. After that huge bump up that you had earlier today, that's mellowed down a fair bit right now in trade. And then, of course, you know, the Goldman Sachs upgrade on Westlife as well. That continues to hold out, target price up to 1,075 as we speak right now. But Sunil, a bunch of these IPOs, right? We've heard it from Swiggy. Next is going to be Hyundai as well. What's your take? I'm sure you're going to take a look at the kind of pricing they come out with and then take a call. And would you believe that as companies, of course, they're must-haves in one's portfolio?
So I would agree with the second half of your thing. I think they are must-haves. Pricing is not so critical here because they are well-understood companies. Because Zomato is already listed, Swiggy, you have Maruti, Mahindra, Tata is listed. So for Hyundai, you have good benchmarks to decide how things are going. You have very good data on market shares and what's happening. So both these are, I think, very well understood from a business perspective, right? Now, what price you pay for the business, that's a market thing. You saw that, Bajaj Housing, well understood business, still post IPO, there was a huge uptick. So I would say I wouldn't be so concerned about prices. I believe these are good businesses worth buying into, getting an opportunity, especially for institutional investors. I would attribute part of the cash that mutual fund managers have been keeping on the sidelines and raising as things that they want to apply for the institutional component of these. So I would say that these are good businesses to buy. Entry points, you can always stagger, buy some in the IPO, buy some post IPOs, but they are definitely must-own stocks in a portfolio because I think they represent the new India in a way that, both Swiggy and Hyundai, I would say, are going to be a part of our life for a significant part of time, and it's a business that are worth owning. So I would not lay too much stress on the pricing aspect here, unlike in the SME IPO space, where it's a completely different ballgame.
So it's a bigger long-term thematic which looks positive, and that's why Sunil is looking at some of these names. But there was that inherent story as far as insurance is concerned as well, Sunil, and we were talking about the structural shift that there is a lot of under-penetration in the country, and there should logically be more upside for some of the names. But PB Fintech as a platform company is coming under pressure because of that entire foray into hospital space. Within the pure play insurance companies, and then of course these platform companies, what would be your view?
I would still back the insurance companies because see, platform companies will generally go on a volume base, to make off the fee of the platform, right? So they would gun for that. They would probably take on initial losses in a bit to build the business. But I think the insurance companies at the end of the day, with their actuarial thing and all that, I think the long-term business model is far more on solid grounds, right? So I would, to my extent, as a medium to long-term investor, I would back the insurance companies. Platform companies, I would say, are short-term pops. You can buy them, base them tactically. But again, the longer-term insurance story, like I said, the under-penetration story is a huge, huge opportunity. And these also would be must-haves in one's portfolio.
Okay, but since we're talking about PB Fintech, that stock has been on a slide. In fact, let's pull up the 5-day chart if we can, because that stock must be down, 18 to 20% over the last 5 days. Today, of course, it's down in the trading session, but over the last 5 days, okay, it's a single-digit decline coming in for PB Fintech. That's the view. But let me take it across and hear out what Manas or for Bernstein had to tell us with respect to this foray that they're making into the hospitals possibly.
There's a lot of lack of clarity around what the exact plan is. The media broke the story, the company's not denied it. Yashish has spoken about it in the previous con calls as well. So it seems like they want to do this. Now, how they go about doing this is the question. Is it going to be capital intensive or it'll be a partnership of sorts? It seems like that is the big question that's weighing on the stock because people bought into the story for PB Fintech for its strong growth, its capital light business model. I think investor communication on that front would be helpful in cooling off speculation. And I think the stock is now stabilized, but the last 3 days has been very, very volatile. So I think clarity on that front will be helpful. We've written a note today which talks about the key questions for the management. Essentially, what is the business plan? It is good for the consumer and probably good for hospitals and insurers, and therefore good for Policy Bazaar. But then at what cost does all of this come up? That is the key question at this point in time in my mind.
Right, okay. In the meantime, Sunil, great to have you on the show. We'll let you go on that note. Let me also get in some closing trading ideas as well. Kunal, what's on your list?
I'll go with the band Titan. That's